Imagine waking up to a tropical sunrise, sipping coffee by the beach, and checking your phone to see your investments growing, without even lifting a finger. Sounds like a dream, right? Well, what if I told you that this dream could actually start in the Philippines? Yep, you heard that right. The Philippines is one of the most underrated investment gold mines in Southeast Asia. In today's video, I'm going to show you why savvy investors from the United States and Great Britain are turning their attention here, and how you can do the same. So why the Philippines? Let's zoom out for a second and talk about the big picture. The Philippines has been on a strong economic rise over the past decade, with over 115 million people, most of whom are young, educated, and English-speaking. This country is bursting with potential. And it's not just potential, there's actual performance. We're talking 5 to 7% GDP growth pre-pandemic and a strong rebound in the post-COVID era. The government is opening its doors to foreign investors like never before. Whether it's through REITs, the Retail Trade Liberalization Act, or tax incentives for foreign-owned businesses, the opportunities are real and accessible. Strategic location plus global access. You know what they say, location is everything. And the Philippines? It's right in the heart of Asia. From here, you can reach China, Japan, South Korea, Singapore, Australia in just a few hours by plane. So if you're thinking global trade, exports, or even logistic hubs, this country is a strategic gold mine. Another reason big companies like Amazon, JP Morgan, and Accenture are setting shop up here is because of the people. The median age in the Philippines is just 25, and with over 500,000 graduates every year, especially in IT, healthcare, and finance, you've got a workforce that's young, skilled, and fluent in English. You don't need to deal with language barriers or expensive labor costs. That's why the Philippines is a favorite for outsourcing, BPOs, and tech support. Foreign investor and friendly laws. You'll definitely love this spot. Here's where it gets exciting for foreign investors. In the last few years, the Philippine government passed laws that make it easier than ever for foreigners to invest in the Philippines. Let's break down a few. First is the Retail Trade Liberalization Act. Foreigners can now own 100% of retail businesses with a capital as low as $200,000. REIT law. You can invest in real estate through the stock market. Ease of Doing Business Act. Faster business permits. Less red tape. Fourth is the Public Services Act. Foreigners can now fully own telcos, railways, and more. It's like they rolled out the red carpet. Let's talk real investments. What you can actually do in the Philippines. Right, let's get practical. What kind of investments can you make as an American or British investor? Let's break it down. First is you can invest in REITs or real estate investment trusts. If you don't want to buy property, that's not a problem. REITs allow you to earn from malls, offices, and buildings without the headache. Here are 4 amazing options. A REIT or Ayala REIT, which gives 5.6% dividend yield. Phil REIT or Philinvest REIT, that gives 7% dividend yield. RCR, Robinson's Land REIT, that gives 6.5% dividend yield, CREIT, or City Core Energy REIT, that gives 7.5% from renewable energy. And the best part? They all pay quarterly dividends. It's like getting a bonus 4 times a year. Moving on, owning a business in the Philippines. Yes, you heard that right. You can now own your retail business here as a foreigner, thanks to the updated Retail Trade Act. If you invest around $200,000, you can start a coffee shop, a boutique store, a mini mart, or a digital services hub. And if you partner with locals, you can get around some of the limitations even more efficiently. Franchising is huge in the Philippines. Think Jollibee, Potato Corner, or even Western brands. Next one is you can invest in the Philippine stock market. Opening a stock trading account is now super easy, even for foreigners. You can use platforms like COL Financial, BDO Nomura, or First Metrosec. And what should you look for? Blue chip stocks, dividend-paying companies, or consumer giants like Jollibee, SM, or BDO. A smart portfolio in the Philippines could provide long-term growth plus passive income. For tourism and hospitality, with over 5 million tourists visiting yearly, there's massive room for growth in the hospitality sector. Foreigners can partner with local developers to build resorts, lease land up to 50 years, open restaurants or travel-related services, or even invest in Airbnb-style properties. And with beaches like Boracay, Palawan, Siargao, you're not just investing, you're living the island dream. Moving on to agriculture and long-term land leases. While foreigners can't own land, you can lease it for 50 years plus 25-year extension. Agribusiness is a hidden gem. Foreigners are investing in organic farms, bamboo and coconut production, agritourism ventures. With the global demand for tropical products like mangoes, coconuts and bananas, this is an untapped gold mine. Next topic is understanding land ownership laws in the Philippines. Now let's talk about one of the most frequently asked questions I get from foreigners. Can I own land in the Philippines? Here's the short answer: no. Foreigners cannot own land in the name, but there are smart legal ways to work around this. First is you can own condominiums as long as the total foreign ownership in the building doesn't exceed 40%. You can lease land for up to 50 years with a possible 25-year renewal. You can set up a corporation where 60% of the shares are owned by a Filipino and the corporation can own land. So while the law might sound restrictive, there's still plenty of legal and safe paths to invest in property and make money from it. Let's talk about the part we all care about: returns. Here's a quick breakdown of average ROI in some key sectors. REITs, you get 5 to 7.5% per year. Franchising, that can give you 10 to 15% per year. Tourism businesses, 15 to 25% or plus per year. Agricultural leases, 10 to 20% per year. Or the stock market can give you 7 to 12% per year. The key to high returns is local partnerships and understanding the local market. Teaming up with a Filipino business partner or consultant can be a game changer. Moving on is how to avoid pitfalls. Not everything is sunshine and mangoes. Investing in a foreign country comes with challenges. Here are a few to watch for. First is scams and fake real estate agents. Always go through verified brokers and lawyers. Land title issues. Some land may have unclear ownership or legal disputes. Third is cultural differences. Business moves slower in the Philippines, so be patient and be respectful. Bureaucracy. There is still some red tape, but it's slowly improving. So what's the solution? Work with local professionals. Always consult a Philippine-based lawyer, accountant, or investment advisor. It's worth every penny. So you might think, what do Filipinos think about foreign investment? This might surprise you, but many Filipinos welcome foreign investors, especially when first it creates jobs, boosts local tourism, brings in new technology and business ideas. There is a growing sense of collaboration between local and foreigners, especially technology, digital services, real estate, and hospitality. But just remember to invest ethically and respectfully, and you'll be amazed how supportive the community can be. Where to invest? Top Filipino locations for foreigners. Alright, let's get into the juicy part. Locations. Here are the top cities and regions that are hot for investment. First is Metro Manila. This is the financial center, great for condominiums, offices, and stock market access. Second is Cebu City, booming BPO hub and tourist-friendly. Davao is a clean, secure, and business-friendly area. Clark and Subic, infrastructure hotspots, which are growing fast. Tagaytay and Baguio, ideal for tourism and retirement rentals. And it has a colder climate compared to the other places. Palawan and Siargao, beachfront property. These are the places that you would choose. Each area has its own charm. Choose based on your goals: urban growth, passive income, or island living. So how to get started? If you're thinking of jumping in, here's a simple guide to get you started. First is you have to choose your investment type: real estate, stocks, REITs, or business. Hire a local lawyer or advisor to guide you through legalities. Open a local bank account. Register with the SEC or DTI if opening a business. Consider dual citizenship or the special investor's residence visa for a long-term stay. And of course, start small and grow smart. You don't really need millions. You just need a strategy, timing, and the right team. So what's it like to stay in the Philippines? Here's another bonus. You're not just investing, you live in. Imagine a beachfront condo for less than $100,000. Monthly rent for $300. Amazing food for $2 a meal. Friendly locals and vibrant culture. Access to world-class healthcare at affordable prices. Many investors move here part-time or full-time because the cost of living is so low and the lifestyle is unbeatable. So why now is the time? The best time to invest in the Philippines was 10 years ago, and the second best time is right now. With the economy bouncing back, the government rolling out investor-friendly laws, and global attention shifting to Southeast Asia, it's the perfect window of opportunity. The Philippines is like a stock that's just about to explode, and the smart money is already moving in. So if you've made it this far, here's what I want you to remember. You don't need to be rich to invest in the Philippines. The Philippines offers growth, income, and lifestyle, all in one. Whether you want passive income from REITs, start a business, or retire in paradise, this country welcomes you. So if you don't mind, like this video if you learned something new, comment below if you have any questions. I read everyone. And don't forget to subscribe because we've got more deep dives into Asian investments coming up. Until next time, stay curious, invest smart, and maybe I'll see you in Manila. Ciao!